truly shocked, truly, that is the end of the year. I feel like we were just recording the end of the year episode. So I don't know what's happening. We're now officially like over 2 years into recording these episodes. So it's just a blur. So I'm excited to take a minute and just reflect and then also look ahead a little bit.
Hey, everybody. Welcome to the Advice Business Podcast. Kelsey, it's been a wild year, an incredible 2025. Somehow we're at the end of it. I can't believe it. Already thinking about 2026. We've done a lot. We've built a lot. We've met a lot of advisors, had a lot of cool conversations on the podcast. I think we're going to try to basically recap what's just happened, talk through what we've learned in the business, but more broadly across the industry. And then what are we doing at Seeds and what are we thinking is going to happen across the industry in 2026? Kind of some hot takes on, a few things I think we're going to see next year, a few things you think we're going to see next year as an industry. We'll see where we overlap, probably argue about it a little bit, and, sail off into the end of the year and into 2026. Does that sound like a good plan?
It does. I am truly shocked, truly, that is the end of the year. I feel like we were just recording the end of the year episode. So I don't know what's happening. We're now officially like over 2 years into recording these episodes. So it's just a blur. So I'm excited to take a minute and just reflect and then also look ahead a little bit. We haven't even talked about next year really much at all in terms of our thoughts on the industry. So this will be kind of a nice opportunity to do so.
Yes. Let's go back to the beginning of 2025 for ourselves as a business. I think we'll be selfish and kind of talk about what's happened at Seeds a little bit before we get into kind of broader industry stuff that we've seen during the year. And then we'll be maybe slightly less selfish about, projecting into 2026. Will be more about what we think is going to be going on in the industry. But the beginning of this year, we raised some money as a business. We raised our Series A at Seeds, and then we were kind of off to the races on building out the team. So had some great, customers and user firms of the platform and raised some capital to continue to grow the product, but then grow the team to support, these new customers that have come onto the platform. So I want to say this may not be exact, but I think we started the year with 8 people. And now full-time, I think we're at 26, something like that. So, we've had episodes just on, and actually had a great episode recently with a guest about hiring. And that's been, we've learned on the fly how to get that right and wrong and learn and, build a process around how to find the right talent and, make sure people are aligned with what we're doing as a business and have them feel supported and engaged in the business. And so that's been a wild learning experience in and of itself, going from, pretty small early stage team to a lot more people, and this is still a small size, but it's amazing to see the difference from starting the year with that sort of org structure. And here we are at the end of the year with a lot more people, and it's super exciting. And, we'll probably have some significant people growth next year for ourselves. So new challenges to go from, in the 20s to probably a decent amount more than that. But yeah, anything on that, any insights that we,
just shout out to all of the new team members who have joined Seeds for sure. It's been so fun to see so many more people getting excited and kind of expanding upon the initial vision and what we had kind of been building and chipping away at, I think, before we raised the Series A. So I think that's been really powerful and exciting. It's been challenging, like you said, of course, growth challenges. And I know we talk to a lot of advisors about that. And listeners of this podcast deal with that all the time as you're trying to grow an advisory business. So this was a great year to kind of put into practice a lot of what we talk about and also run into different challenges that we could use and take away as learnings going forward. So I think it was great in that respect.
We'll get into kind of what we built as a platform and in the product a little bit, to kind of touch on where we were and where we are now as a platform, and maybe a little bit of a sneak peek of what's coming next. But the other big thing I wanted to call out that we did this year was a pretty massive rebrand. The folks at Objective Brand, who are awesome, helped us with really a complete overhaul of, the look and feel of our brand, but I guess all the different aspects of the feel part, I guess. In other words, how we position ourselves, our messaging, making sure that it was really clear, as we sort of more officially went to market to financial advisory firms, making sure it was clear what we were building toward and what our platform is and how we're trying to support financial advisors and their end clients. So that was a huge lift, right? So, going through that process, new website, new logo, new materials, new positioning, and so on. Nothing, I would say, fundamentally changing in terms of what our vision was as a platform and product and service to advisors. But again, like really wanting to make sure that brand and messaging best reflected that. And so, yeah, it was a heavy lift, and I'm glad to be on the other side of it. And I will say, certainly worthwhile as we talk to advisory firms now as they come in to, meet us and have demo meetings and have conversations with us. They're coming in the door with a clear understanding of what exactly we do here. So I think there's always room for us, and it's something we're going to continue to iterate on to make sure, brand messaging, sales materials, all of the different stuff aligns with how we want advisors to perceive what we are and what we do. But it was a big move in that direction at the beginning of the year with that rebrand.
Yeah, I mean, we're always learning and growing and changing in this area because we are a startup, and arguably brands should always be to some extent. But I do think that, I think that we did it at the right time. I think if we had done it any earlier, we wouldn't have known enough about exactly what this could be based on that early user feedback and, kind of pairing up the vision where we think the industry is going with what we're actually hearing and what's actually happening in advisory firms that we're working with. So I do think we did it at the right moment. I think it was a big lift. As you said, it took a lot of resources to kind of make that change. So, stuff like that always seems like it's going to be a lot easier than it is, especially if you're outsourcing it. But all of the things that have to change with a big rebrand like that, I think were huge, but definitely worth it. Definitely feels like our new brand better aligns with who we're trying to speak to, and that they understand what we're saying more, and that it's definitely more aligned with where we're going in the future. So I think that was great. I know that was like a high point for everyone, for the team this year, for sure.
I'm just realizing I'm wearing a swag hat.
Swag, yeah.
All right, let's talk about, in that context of that brand relaunch, and wanting advisors to really understand what we are and what we're trying to help them with. Let's restate it, right? What are we trying to communicate? What is the platform? And then, how are we thinking of product roadmap and things to come into next year? Always trying to break it down as these sort of almost pillars of the investment management journey between advisors and their clients. And advisors are very familiar with how many touch points there are through that life cycle, from an intro meeting discussion to discovery to a investment proposal to implementation, and then the ongoing management of portfolios, and then the ongoing engagement of, in the relationship between the advisor and the client about the portfolios. We are trying to connect all those things together in one platform experience, right? Put, a series of tools in the advisor's hand to create that a more connected experience from the beginning all the way through, hopefully a very, very long relationship between the advisor and the client. So what do we mean by that? Having, or I should say, what are sort of the features in the platform that enable them to do that? The first is where we spent a lot of time and a lot of focus is an assessment experience. A big part of what we believe is advisors want to and probably should really deeply understand who an investor is when they walk in the door, right? We advisors tend to do a great job in a broad discovery process and understand family dynamics and balance sheet and all these different moving pieces of a person's life, but not necessarily quite as much as it relates to who they are as an investor. So if we can enable advisors to better understand that investor through a really compelling, easy to use assessment tool, we need to start there. And then how do we connect that understanding to the right storytelling on the other side? And so we spent a lot of time this year thinking a lot about that assessment tool, how it's designed in terms of the words in the questions, to the way it flows, to how it's dynamic if an investor says this, do I really need to ask them this next, or should I ask them this next, and so on, to create this, these guardrails for an experience in that discovery phase of the relationship. What's next? I guess the outcome side, and where we've thought there, and kind of where we were at the beginning of the year, and what's coming next. What should a portfolio be if you get all of that information? And so we've thought a lot about, this concept of a logical framework. If I'm getting all of these inputs from an investor, what's going to come out the other side? And we've had podcast episodes talking about part of the reason we believe advisors maybe haven't asked these additional questions historically is because if you do, you need a logical way to connect that to something in the form of a portfolio on the other side. So if you ask about goals, if you ask about risk tolerance, if you ask about taxes and account types and values and thematic preferences and all of these additional inputs, you're going to have to do something about it. And so we've really built out that logic framework to say, if you understand these things about a client, here's the personalized portfolio on the other side. Are you using direct indexing? Are you not? Are you using munis given their tax situation, or maybe taxable bonds? How are you tax locating that exposure? Are you sleeving in thematic choices because they're really inclined to be excited about different emerging, trends? All of that should have a logical connection. Maybe Kels, talk about how we've opened up that framework and thought more about, we think advisors also want a level of flexibility, which is reasonable and makes sense because there's part of the story that they want to tell about how they've built out the investment solution. And so maybe touch on how we've sort of expanded on that idea of, you have this assessment experience, you map to logical outcomes. Seeds had built those logical outcomes, but what have we thought since, and sort of what's coming next there?
Yeah, for sure. So I think the reason to have those logical connections is obviously for internal reasons. So to make it repeatable, to make it scalable, to make it make sense if someone were to audit your business. That's important, but also so that you can connect each step in the experience from one step to the next. So from discovery to proposal to implementation to ongoing check-ins, all of those points should be connected. And if you don't have the right solutions to show and to continue to show that you are listening and responding, then you can't really do that. There are firms out there who have amazing investment solutions, and they just lack that framework of putting it all together. And so I think where we're going here is really to open it up so that it's not just all seeds. It's not just seeds discovery process, seeds investment solutions, seeds proposal. It can be a combination of things. It could be seeds framework for assessment and proposal, but with your own building blocks of models that you can lay into a UMA structure and that are kind of built into that logic framework. So that's where we like to take this, because at the end of the day, I don't think that we are saying you absolutely must use the investment products that we have selected to meet that need for that specific type of investor. That's not ever what we've wanted to say or what we do say. But there should be a reason that you're putting that portfolio in front of the investor, and it should be clear to you and clear to them why you're sharing that proposal with them. So I think that's where we'd like to go, if that's what you were getting at. And everything that follows from there is important too. So then what are we doing? How are we engaging with this client? How are we, every single touch point from that point on should also be something that fits the firm, but also fits within the framework of what Seeds has built, which is that connected experience step to step as you as the advisor show up, so that you can really, and ultimately the goal, to show up in the room and to have something meaningful to say and to deliver a personalized but meaningful experience, regardless of who's in front of you, regardless of what they think and where they are and what they prefer. So it's all to serve that same purpose, but more flexibility for the advisor to kind of lay in the things that make them special or the things that they believe make their firm special.
Yeah, if this is how, your non-direct indexing equity ETF exposure is to be, organized in your world for these reasons, you use these funds at these target weights. Cool. That's fantastic. There's a reason you've structured it that way that you need to be able to scale. And what else is going to fit around that model, whether it's direct indexing or your fixed income exposure or alternatives or whatever it is, that is to some extent, that mapping process is in the primary advisor's head. They go into that discovery meeting. There is no assessment. It's a conversation, which is probably a great conversation, and they gather a lot of information. But that moment of translation is very much qualitative. It's a thing that's happening in your head that can't necessarily be repeated. And so the goal is to serve both purposes. The scalability for an advisory firm where you can have a sort of second chair or any next gen advisor get into that discovery process and connect inputs to outputs and have a logic framework with your home office models or our stuff or whatever combination of that. And it's also the stuff you just pointed out, the experience piece. It's not just there's a logical way to get from this to this for internal purposes that, a regulator would very much appreciate seeing. It's also the experience connection. I understand these things about you as my soon-to-be investor client. Therefore, this is the logical portfolio that reflects all of that. And really being able to tell that dot connection story is the other goal, in that logic framework. So we spent a lot of time thinking about those connection points and the flexibility of those connection points and the building blocks that can go into these personalized portfolios. So let's go to the next piece. What is the next dot in that, investment experience journey I said a minute ago? It's then getting that portfolio into a client account. And we've had, I don't know, 100 or hundreds at this point, advisor conversations, even over the last year. And every day we have these conversations, it becomes ever more apparent that the portfolio operations parts of what they as a firm are trying to do, especially as they're growing past that, $75 million to $100 million AUM range, it's such an immense burden on the firm. We often see that the primary advisor is also the trader, whether they're using sort of a legacy TAMP solution or, we see a lot of account level trading and really manual processes still happening on the implementation and trading side. And so being able to abstract, advisors who shouldn't be traders, in our view, from trading and leveling them out of those mechanics is what we've built, in that next connected dot. You should be able to propose that personalized portfolio, connect the rationale of it back to the insights you gathered in an assessment, have that client be super excited, understand the story, and say, I want you to be my financial advisor, and for you to be able to press a button to have that implemented, not log into a system and start placing trades and making, trade rules decisions, et cetera, et cetera, et cetera. So both the moment of implementation, right, getting that portfolio put into that account, but then everything that firms tend to then need to be doing subsequent to that, right? Now you have portfolios invested. How are they being rebalanced? How are they being tax loss harvested? How are you raising cash? All the things we've, spent several podcast episodes over the last year talking about. We've seen that more and more as a critical pain point for growing firms to abstract out of needing to do those things. I would say the learning for us from a product perspective, and Kelsey, you can kind of, expand on this, is advisors are very much looking for that automation, right? How do I press go and have it go so that I can go do review meetings and do prospecting and not be a trader anymore? But also there's a trust factor, just like an end client hiring a financial advisor. There's a trust factor in what am I seeing that system do? How is it trading? How is it rebalancing? And so on. So maybe take it from there and kind of where we're headed with that.
I think that where we're headed is we really want to make sure that advisors have the right levers and the right controls in place, and also have enough oversight to understand at any given moment, if a client calls you, if you have a meeting you're preparing for, you know exactly what's going on in the portfolio and why it's happening, and you know how to communicate about it to the client. So basically, I think what we're hoping to do is really take the learnings from this year and translate that into, here are the right settings. Here are the right controls. Here are the right buttons. Here are the right things that you need to be able to set this up, to be able to kind of set it and forget it for the most part, to know how to make changes if you need to, but then to have the visibility to see that Seeds is operating as an extension of your team, essentially, and that we've taken the ball and we're running with it. And that at any given moment, you could understand what's going on in the portfolio and why. And so I think that's where we're headed. So there's a lot more to come there, but been having a lot of conversations with advisors about what is that right level of detail, what is the right level of like control and like oversight on a regular basis that the advisor needs to have versus that Seeds should have. And I think that this is something unique about us. That's one of the most difficult things for our prospective customers to understand is really like, what is my job versus what is Seed's job? And why do you offer such comprehensive services compared to some of your competitors? What is that about? And for us, it's not just like, it's not an optional thing for us, mostly because we really truly believe that the operational side of the experience has to be done exceptionally well and has to be done consistently in order for you to deliver on that meaningful experience and to really show up in the room and be confident. But we totally understand that to show up in the room and be confident, you also have to know what's going on and why. So essentially, we want our platform and the extension of the team that supports our platform to be like you're hiring someone who's just a killer, like star A player, right? Like that's what it should feel like. It should feel like when you're using Seeds, wow, I wish I hired this person a year ago. It would have changed my whole year, That's how it should feel. So that's really kind of what we're designing around. That's what we're aiming for. And so really getting in the weeds and understanding how to make it feel that way and how to make sure the advisor is as comfortable as possible, but isn't sucked back into the weeds of all of the day-to-day, week-to-week trading detail stuff that most advisors know is not their strength and is not why people are hiring them, but they feel like they have to spend time there because they don't have any other options, really.
That's it. I think, 2026 is how do we make the assessment tool that much better? How do we make that logic framework and personalized portfolio construction and flexibility that much better? How do we enable advisors to then do really compelling moments of proposals that much better? So touching on that storytelling piece of what would you propose to an investor prospect if you knew all this information about them? What words would you say? What modules would you put on the screen? Making the steps of implementation that much better and more seamless. Making the trading functionality and automation that much more transparent and clear. And then, we'll hint at really the exciting stuff of what will then come sort of layered on top of all of this is continuing to enhance the way the platform enables the advisor to tell a story about the portfolio on an ongoing basis, right? If I deeply understand an investor at the beginning of the relationship and I have this portfolio information after I've implemented it, and I know what trades are happening, and I know what's happening in the markets, and I know this and I know this, what should I exactly be talking to them about in a review meeting as it relates to their invested money? And what should I be surfacing to them in between review meetings during the course of the year? So more to come on that, but that's really where, we're excited to start to build toward faster next year. What else? Anything else on that? And then I think, talking about some prediction stuff heading into next year we want to cover.
I don't think so. I think we're going to have to cruise through the prediction section because we're running short on time. So
I know we each had 3, but maybe you go first. And then if I don't have one that's as good, I'll figure out which one of mine to skip.
No, I think we just do them all, but this is our chance to go snap. Like, let's try to go through them really fast. And then let's reflect back.
We've had a year to figure out how to actually be succinct. So, okay, you go first. Go.
Okay, so my first one is going to be, I think that advisors who are successful, firms that are successful in 2026 that are really winning are going to be putting experience above everything else. And when I say that, I mean actually getting in the seat of the client and trying to experience their own customer experience and client journey and trying to poke holes in it and trying to compare it to what a person is used to experiencing across the rest of their life. So that is my first thing. I think that there's a lot of tech hype, yes, but I think that there needs to be a recentering of the human interaction and the actual journey in terms of the moments of connection across, whether they are tech connections or human to human connections.
Mine is the same, said in the inverse way, I think. This was the year of AI and AI hype, and I don't think that's going to go away next year. Although I am hopeful that firms make the realization you're describing and refocus time and energy there, right? So this has been the year of let's sign up for every shiny object AI thing that helps me with some amount of efficiency potentially, which is great. As we've said on previous podcasts, that's not inherently a bad thing. But if it's a distraction from, addressing fundamental aspects of your customer experience and how you run your business, then, who cares? So I think there's going to be I'm hoping that sort of awakening of this stuff is great. It's not to say we shouldn't be, looking to leverage efficiency tools, but who cares if your customer experience sucks, right? Solve that first.
Yeah. Well, you're making it easy for me to jump to another one of mine to quickly go through it, which is about operations. So I think, like, to your point, it's been a big year of a lot of exciting things happening and a lot of innovation, and advisors want to get their hands on that, make sure they don't fall behind. And I think that that's great. But if we are going to focus on the experience and if you are going to win that way, then the only way you can really do that is by also focusing on operational excellence. It's essentially like the behind the scenes version of a really high quality client experience. If you can't repeat something, you can't really say that you have a high quality client experience. You just did it really well one time for a client, but that's not your client experience until you really systematize it. And that means people, that means process, that means technology, that means how those three things come together, and really spending time there and being intentional there and enabling the people who are most close to those things, who are working most closely there. If you have an ops person, if you have a more junior or next gen advisor who takes point on tech initiatives, if you have, someone actually responsible for tech and process, whatever you have going on, whomever that is, making sure that that person or those people are integrated with the client-facing folks, and that there is that consistent, you're looking at both layers. You're looking at what's happening in the room, what's happening with the products and the solutions, and then what's happening behind the scenes. How are we enabling what's going on in the room? How are we thinking about who to hire next, how to build a process that's going to scale as we hire and as we have more customers, what tech we need to support that, all of those good things. So it's kind of two sides to the same coin.
My next one is kind of little wonky technical, but I do think we are going to see some realizations of the issues of this going into next year and increasingly so. We have had, as I said a minute ago, lots of conversations with lots of advisory firms. It would shock some people in the industry to know how many of these firms are, in the call it $0 to $500 million range, are still trading customer accounts and doing investment management at the account level. So meaning I get a new client, buy some stuff to put into their portfolio that isn't templatized in any meaningful way. There's not really any model structure. And then the way I rebalance them, the way I tax loss harvest, the way I unwind legacy concentrated gains, the way I rebalance is predominantly happening at the account level. It is amazing how many times we have heard that is happening across firms that manage $300 million of people's money. And there's this weird thing that has happened for basically now the history of the industry is you've gotten away with that because your clients they're not getting in a room together and comparing their performance reports. So they have no idea the absolute returns dispersion chaos that you are unintentionally delivering to that client base. So there's this standoff, right? In fairness though to those advisors, it's hard to go back to that client base and say, "Hey, I've created this challenge for myself as a business and, this returns dispersion issue," and then subsequently be able to fix it. But I think we're at a place in the industry where clients are sniffing this out and better understanding that, yeah, it is odd that, I'm getting something's happening in my account because I have a review meeting coming up with my advisor, as opposed to a more systematic, rules based concept of how their money's getting managed on a regular basis. So I also think, maybe to state the obvious, that sort of next gen investor expectations, that expectation is there already, right? The fact that if I went into, and obviously we're biased and we know the industry too well, but to walk into an advisor's office and get pitched that, they're going to buy certain stocks and bonds in my portfolio and then sort of trade it themselves with no rules framework would be the sort of silly thing to hear. That, this isn't built around some, engine. So again, a little in the weeds. I think it's more systemic than we talk about as an industry. And I think it will be a pretty painful thing to fix for a lot of firms. And I think that's, increasingly going to be a thing to figure out.
Yeah, I think like historically, there's always been an understanding of who the competition is almost. So there was a fear around advisors, but for the most part, advisors have been competing with other advisors, right? And I think that one interesting thing to pull out of what you were just saying is that there's never been a time, I know that we've been saying this forever, but there's never been a time where like there was more access to information than now. And with even just the ChatGPT and what ChatGPT alone, don't even consider all the other tools can do. I think that this is now the time to be more afraid of what people thought robos would be. And I think that's kind of obvious, but I do think what you've brought up is the less talked about side of that fear. There's a lot of talk about like the planning and can you replicate the human stuff and whatever, and very little talk about how far behind are we in general from just having any standard of what good looks like and what you should expect to get for 1% and what is a bad experience. And I don't mean experience like in the room, I mean service offering. What is a bad version given how much tech exists, how much
Yeah.
is around in this industry? What is not good? I think that it's kind of just like you're saying, like no one's talking about it enough because the competitor may just be, I don't want an advisor at all. Like the DIY, right? And not even like robo, but I'm just going to figure it out via AI, YouTube videos, whatever, calculators, that AI builds me. Like, so there's just a lot there, I think. And to your point, that one piece of it, I think, is not talked about enough,
Well, yeah, but you're right that like I'm picking on this very specific, well, I mean, it's a major, big piece of an advisor's business, but it's a specific thing. It is, I think the broader point is the point. It's like, we talk a lot about, as firms who do leverage technology, what you're delivering in theory becomes increasingly commoditized relative to each other. I guess the point is we don't talk enough about the fact that so much of the industry is still just not even paying attention to these fundamental things. And so the delta between those and the firms that are even like trying to deliver on experience and added value and what the expectations of next gen customers is, that's what's shocking. If you actually zoom out, that's the shocking thing. I think just one of the elements is this, concept around portfolio management, which obviously we're biased because it's part of what we're trying to solve for firms.
But also but it's a critical point because it is one of the only ongoing, like truly ongoing, as in day-to-day things that someone is paying for if they're engaging with you and paying you like a fee, right? For the most part, if you're doing planning fee only, fine. But if you're actually collecting revenue from how you're managing investments, this is like truly one of the only things that is continuing and like they are paying for regularly. So I do think one interesting like thought thing to just play around with and to pull apart would be everyone's talking so much about like, is AI going to replace the humanity? And like, I'm a human and people are always going to want the human. And we talk about this a lot and that's super important. But what if it comes down to, well, actually I do prefer a human, but it's worse. Like truly it is worse than AI because there's not enough emphasis being placed on like basic fundamental like money management and just generally good advice. You know what I mean? Like, I think that it's important. And I think that the firms that we're working with that are growing the fastest know that that is the thing to go figure out how to hand off to technology and to specialists so that they can maximize the human thing. But I don't think it's talked about enough that like that's actually a strategic decision. Like that's you saying, okay, I'm spending my time on this because I know that if I do this other thing, I'm never going to do it as well as technology. I'm never going to do it as well as a team of specialists. Like, so why would I spend my time there? Which does bring me to my next point, my final thing that I had written down. So I'll take it. I'll slide right into that, which is just, I really think that the firms that are going to succeed in 2026, and I saw this in 2025. So this is just kind of expanding upon what I would notice this year is just the firms that combine thoughtful strategy with speed. And when I say thoughtful strategy, I just want to like pause there. I mean firms that actually understand what problem they are trying to solve and have really taken the time to understand the problems they face. And when I say problems they face, where are you trying to go? And why aren't you there already? That gap, why? That why gap. So really understanding that. And then trying to put a solution or a couple of solutions in place that you are aggressively trying to pursue in 2026. That's what I mean by strategy. So not all the details of strategic planning, but the actual like kernel of truth of what you're trying to do and what your strategy is going through the year. And then the second half of this is speed. This is one of the biggest things that I've seen in 2025. I have talked to so many founder advisors, the leaders of firms who have major strategic challenges in their way. They've done a decent job of identifying the problem and identifying a solution, but the speed is just completely non-existent. And the reason I think this is important, especially as we go into 2026, is as everything changes and as all these shiny objects cross your plate and as all of these challenges arise, the speed of making decisions is very important. And without a good strategy, with just quick decision making, you will be in a tough spot. But if you combine really thoughtful strategy that you're kind of continuing to touch base on throughout the year, and then you push yourself, make the decision. Stop doing this analysis paralysis or this like rejiggering of options. I'm just seeing so much of that. And startups fall into this trap too. So I'm not saying you have to be making decisions as fast as a venture-backed startup, but I am saying that like I've talked to firms for years sometimes that still struggle. They still haven't solved the problem. And it's not because they don't understand what the problem is. It's because they just are hesitant to pull the trigger and actually hit go and then execute. And so that's what I want to bring up is just, I just noticed such a clear difference between firms that do that and firms that don't.
I think, yeah, mine is almost the inverse or different layer to it, which is you need to identify your problem. So and again, think this is going to be so critical next year for so many firms. Identify problems quickly, speed to decisions to move forward, but also trying to, and you touched on this, but trying to think with the end in mind, like what is the actual longer term thing, not just the like a problem or thing you want to solve right in front of you, but you'd solve that in a way, the context of what are you ultimately trying to aim at longer term will help you make that decision faster and make the right decision, as opposed to let's just do this thing this way right now because it sort of moves the ball forward, but then I'm going to have to meaningfully pay for it on the other side. I think a big example of this that we're seeing a lot of, I think we'll see it really emerge next year as it relates to aggregator firms really of any size, where, what were you trying to solve? You were trying to solve for growth. So, get firms onto your platform at all costs in any way possible. Throw money at them, allow them to do whatever they want from a financial planning and, services perspective, use whatever pieces of technology they wanted, do investment management in whatever way that they wanted to, because all you were solving for was get assets on the platform and you're competing with, PE that's throwing 1000x multiples at these advisory firms. And I do think you're then paying the piper on the other side of this, right? Trying to then herd the cats within these organizations from a compliance perspective, from a service perspective, from a support model perspective. The investment management piece, obviously, we think a lot about. You've got now all sorts of rep as PM chaos happening inside of these firms. I think that's going to be a kind of meaningful, there's going to be a meaningful reset next year and for years to come, really, of, I would say for a lot of reasons for aggregators, but just, this sort of second phase of people have, sold in or merged in, and now, the absorption process is going to be challenging. But again, that's just an example. You can take that down to sort of any level in any size firm of something may feel like the right thing to do in the moment, but how are you going to pay for it on the other side? And even like that's applicable for us as a fast moving startup of there are trade-offs that are worth making, decisions to be fast, do the next thing, move the ball forward. I guess to summarize the point, it's like, know what you're going to then have to pay on the other side of it. At least identify what that thing is going to be. Whether it's you're solving for growth or trying to, get out of the business and be more of that CEO as opposed to the primary advisor, whatever it is, there's step one, but then there's probably a step two, and you should know what that is and what that's going to look like.
Yeah, it's essentially like the precursor to what I was sharing, which is like know where you're trying to go and like what role you want to have in where you're trying to go, basically. And then that's what you need in order to then say, okay, what's the gap between where I am now and that? What are all the things that are going to have to be solved along the way and built along the way? And then the question becomes, what is the right thing to do now? And then once you have done that, you can then move with speed and actually take action quickly. And I do think that's a critical thing to point out, is that sometimes you can't make a decision because you haven't done that back work. You haven't done your homework yet. So it's impossible to make a decision that you feel confident in because it's not based in anything in terms of like a vision for the future and your role in it and other people's role in it, or an understanding of the problems that are in the way of you achieving that vision. So I think those two really do go together. And like you said, you see it as you scale like up and down, within the advisor populations and the leaders that we've been talking to over the last year. Like aligned-ish, it all went together pretty well.
We connected it all together. Somehow we do better with those connections when we don't think about it too much ahead of recording. The last bullet here is about like where will we be in 2026? Where is that? We're going to be at conferences. We'll be at Future Proofs, Miami, Huntington Beach, et cetera, et cetera.
Schwab Impact. I think the first big one coming up would be Future Proof Citywide. So
yeah, find us there.
Find us there for sure. We're going to be doing some of the smaller conferences, client events. We're also trying to travel around more to visit with our client advisors, but also prospects. So if we are in cities, you may be hearing from our sales team, just trying to reach out and trying to see, is there anyone new we could be meeting, whether that's a potential partner or a potential client or a current client, all the good things.
I would say that's one thing I've relearned, reestablished, is the value of being in person with our advisory firm users or, prospective users is just unbelievably different from, this whole virtual thing. So we've learned a lot, done episodes on being a remote company and what that means internally, but then also trying to do that from a sales and support perspective purely as a virtual company is a challenge. And we've started to do more of just showing up in advisory firm offices and spending a few hours, and it's been incredible. So, we appreciate our user firms allowing us to do that and come spend time with them. And I'm excited to keep doing that next year a lot more as well.
Mm-hmm. Yeah, same. You know me. I love, put me in person. I desperately need it. It's hard to travel with little kids, but it is so much different. Especially even at a conference, you're crossing paths. So having that like dedicated time to really talk and sit down and figure things out is a big deal.
Yes. Yeah. And we've got some in-persons with the team as well. I think that's been so valuable for firms to think about. Like if you're still virtual as an advisory business, we've had great success in just making sure at a minimum quarterly, our teams within the org meeting, doing an all hands event in February we're excited about that. Yes, Kelsey, we know how much you enjoy doing that. And yeah, it's great for the whole team. Well, we appreciate everybody listening for, I guess, almost 2 years now. And this crazy year of 2025. We hope you continue listening into 2026. And I guess we'll see everybody next year.